Silver is trading around $89 right now. But the big question traders are asking is simple. Is $90 about to break? Because if silver pushes above that level, we could see the next move toward $92 or even $94 very quickly. But if it fails again, the market might drop back into the mid-80s. So let's break down what's really happening in the silver market today. Silver is trading around the $89 level right now, and traders across the precious metals market are closely watching what happens next. The reason is simple. $90 has become one of the most important resistance levels in the silver market right now. After the recent volatility that pushed silver from the mid-90s down into the 80s, the market is now attempting a rebound. The big question traders are asking is whether this rebound has enough strength to push silver through $90, or if this level will once again act as a ceiling and send prices lower. To understand what might happen next, we first need to look at how silver reached this point. Over the past few weeks, the silver market experienced strong momentum that pushed prices rapidly higher. Speculation increased, bullish sentiment spread across financial media, and traders began discussing the possibility that silver could move toward $100. However, markets rarely move in straight lines. Once prices approached the mid-90s, profit-taking began to appear, and the market quickly corrected. That correction was sharp and dramatic. Prices fell from around $94 down into the mid-80s within a relatively short time. Moves like that can shake confidence in the market, especially for traders who entered positions near the top. But corrections are a natural part of financial markets. In many cases, they serve to remove excess speculation and allow the market to reset before attempting another move higher. Now the market is attempting to recover from that drop. Buyers began stepping back into the market around the $85 to $86 area. That region acted as a support zone where demand started to outweigh supply. As buyers accumulated positions, the price slowly moved higher again, eventually reaching the $89 level where we are today. The importance of the $90 level cannot be overstated. Round numbers often play a psychological role in financial markets. Traders tend to place orders around these levels because they are easy reference points. When a market approaches a major round number like 90, trading activity often increases as buyers and sellers battle for control. If silver manages to break above $90 and hold that level with strong volume, it could trigger a new wave of bullish momentum. Many traders use breakout strategies that involve buying when price moves above a well-known resistance level. In that scenario, the next potential targets could be the $92 and $94 areas where the market previously encountered selling pressure. However, if silver fails to break above 90 and instead forms a lower high, the market could move back into consolidation. That would mean prices could remain trapped between $86 and $90 for some time, while traders wait for new catalysts. One of the most important drivers behind silver prices right now is the US dollar. Precious metals are priced globally in dollars, so the strength or weakness of the dollar can significantly influence the direction of the market. When the dollar strengthens, metals often face downward pressure because it takes fewer dollars to buy the same amount of silver. Conversely, when the dollar weakens, silver becomes cheaper for international buyers and demand can increase. Interest rates are another key factor. Precious metals do not generate yield like bonds or savings accounts. When interest rates rise, investors can earn more from interest-bearing assets, which sometimes reduces demand for metals. But when interest rates stabilize or decline, precious metals can become more attractive again. Inflation expectations also play a role. When investors worry about rising inflation, they often turn to assets that historically preserve value. Precious metals like gold and silver have served that purpose for centuries. Although silver is more volatile than gold, it can still benefit from inflation concerns. Industrial demand is another factor that distinguishes silver from gold. Silver is widely used in electronics, solar panels, and various high-tech applications. As the world continues to invest in renewable energy and advanced technology, demand for silver in industrial manufacturing has grown. Solar panel production alone consumes significant amounts of silver because of its superior electrical conductivity. Because of this dual role as both an industrial and monetary metal, silver often experiences larger price swings than gold. When industrial demand increases and investment demand rises simultaneously, the market can move quickly. But when one of those demand sources weakens, volatility increases. Another important aspect of the silver market is futures trading. Much of the price discovery for silver happens in futures markets such as COMEX. Futures contracts allow traders to speculate on the future price of silver without necessarily taking physical delivery of the metal. This creates leverage in the market, meaning relatively small amounts of capital can influence large positions. Leverage can amplify both gains and losses. When prices rise quickly, traders using leverage can push the market even higher. But when prices begin falling, stop-loss orders and margin calls can accelerate the decline. This is one reason why silver often experiences rapid price swings compared to other assets. In recent weeks, we saw exactly this type of dynamic. As silver rallied toward the $94 level, speculative interest increased dramatically. When the rally stalled, many of those speculative positions were forced to close, contributing to the sharp decline that followed. Now that the market is stabilized near $89, traders are once again trying to determine whether the trend will continue upward or if the market needs more time to consolidate. Technical indicators are providing mixed signals. On shorter time frames, the market appears to be forming higher lows, which is generally considered a bullish sign. Higher lows suggest that buyers are willing to enter the market at progressively higher prices. But the market has not yet confirmed a breakout above resistance. Moving averages are also being closely watched. These indicators smooth out price data over time and help identify trends. If silver remains above key moving averages on the daily chart, it could indicate that the broader uptrend is still intact, despite recent volatility. Volume is another important signal. When a breakout occurs with strong trading volume, it suggests that many participants are supporting the move. But if price approaches resistance with declining volume, it may indicate that the rally is losing momentum. Traders are also paying attention to macroeconomic data. Economic reports related to inflation, employment, and manufacturing can influence expectations for interest rates and currency movements. Because these factors affect precious metals, economic news often triggers sudden moves in the silver market. Geopolitical developments can also influence sentiment. During times of uncertainty, investors sometimes move towards safe haven assets like gold and silver. However, geopolitical events can also strengthen the US dollar, which can counteract that demand. Another element influencing precious metals markets is central bank activity. Many central banks around the world have been increasing their gold reserves in recent years. While central banks typically buy gold rather than silver, these purchases can still influence the broader precious metals market by shaping investor sentiment. For traders watching silver right now, the key focus remains the $90 resistance level. If the market can break above that level with conviction, it may signal that the rebound is turning into a new rally. But if the market struggles to break through, it could indicate that sellers remain active. In that case, silver might move sideways for a period of time while traders wait for new catalysts. Consolidation phases are common after strong volatility. During these phases, the market often forms a range where buyers and sellers gradually establish a new equilibrium. Support levels below the current price are also important to watch. The $86 and $85 areas have acted as support recently. If the market were to fall below those levels, it could indicate that the rebound is weakening. For long-term investors, however, short-term volatility may be less important than broader trends. Many analysts believe that long-term demand for silver will continue growing due to its role in technology and renewable energy. This structural demand could support higher prices over time, even if the market experiences temporary corrections. Short-term traders, on the other hand, often focus on immediate price action and technical signals. For them, the next few trading sessions could provide important clues about the direction of the market. Right now, silver is positioned just below a key resistance level. The market has rebounded from recent lows and is attempting to regain bullish momentum. Whether this rebound turns into a breakout will likely depend on how traders react as price approaches $90. If buyers step in aggressively and push the market above that level, the next stage of the rally could begin. But if sellers defend the resistance, the market may need more time to build strength before attempting another move higher. For now, the silver market remains one of the most closely watched commodities in the financial world. Its combination of industrial demand, investment interest, and macroeconomic sensitivity makes it uniquely volatile and potentially rewarding for traders who understand its dynamics. As we watch the price hover around $89, the market is essentially asking a question. Is $90 the next breakout level, or will resistance hold once again? The answer to that question will likely emerge in the next few trading sessions, and when it does, it could determine the next major direction for silver prices.